Okay, so when it comes to your debt, you have a line of credit. How much of a limit do you have on that line?
I've got. Let me get my paperwork out here. I think it's a $40,000 line of credit, and I've got. I think $34,000 already on it. So I think I've got like 6,200. Yeah, it's a $40,000 limit, and I've got 34,000 on it. So I've got like $6,000 on it.
And you
And
have
I really haven't been. I've just basically been paying the minimum on it all these years because I think I can renew it in 2025. It was like a 5 year, and I think then an 8 year payback.
okay.
When I was going to ask you too, whenever I want to get that done, can it just roll over? You know what I mean? Can it, instead of opening up a new one, can they just roll that one over, or how does that work?
They probably will. You'll have to talk to the bank about that, how they'll handle it. But probably just renew it if
Okay. Okay.
no, shouldn't be a big deal. And by the time you get there, your credit score should be way up. So
Okay.
that shouldn't be a problem.
Right.
Okay, so if you have a $40,000 limit, you're at 34,000 right now. You have the 0%, and you have two big City and Discover loans. Just look at your living expenses right quick.
My large city card was smaller than that a couple of months ago, but I've had like $2,000 worth of medical bills within the past 3 months, and then my water heater went out, so that wasn't too cheap. That was about $1,200 to get that fixed too.
See, that's the life that happens that we need to be
Yes.
prepared for. Yep,
Yes.
that's it. Okay, so have you considered getting a larger line of credit?
I haven't. That's why one reason why I wanted to ask you because you're more knowledgeable on this. So how would I go about that? Would I just
Okay, what's the value of your home? Do you know?
the value of my home is about 100 and I think 190,000.
Okay, all right.
I've been here for about 13 years.
All right. Okay. So I figured that if we were going off of the low appraisal of 150, that you would have 135 that would be available for your use, which would pay off your Everwise now and then give you 20,000 total to use. How did I
Okay.
come up with 54? Oh, wait. No. Okay. Hold on. I think I was, hold on a second. So 150. That'd be 120. Oh, okay. Wow, that's even better. Is that better? 80. Oh, no. Hold on. 81. Yeah, that left you 54. So about 54,000. They would pay off the Everwise. Maybe if Everwise is not HELOC, then they would leave it alone. So you would have that too, which wouldn't be a bad idea. And that means that you would have about 40,000 available to use in the line, which would, could pay off your car or could pay off your loans down here on the bottom, which is probably what you would want to do because that'd give you about $946 in payments that would turn into cash flow.
Right.
You have to look at things like that. If you were to get a bigger line of credit, what would you be able to do with it? So when you look at your numbers and you say, okay, well, I'm paying ridiculous interest on these two loans.
Mm-hmm.
Paid them off the 35,182 or 34,182, gaining 947 approximately in monthly payments, which means that you would then be paying that off in about 30 months approximately.
Okay.
Now that's a slow go of it, but another option would be to get a first lien HELOC that pays off your home and then gives you the money to pay off other debt. That's another option that you have.
Okay.
So let's say if you've got 135.
So if I got a first lien HELOC, what would I probably get off of that? I mean, how much do you think?
Well, at an appraisal of 150, which would be a low, 150, they'd give you 90% of the value, which would be 135. Then they would pay your home off. So that's 81.
Okay.
81,000 paid off. That leaves you 54. Then you could also hit the, you could hit your City and Discover loan. That's 34,182. And then you could even take City Diamond, say. So there you've gained 1,500 plus your house payment now as cash flow.
Okay.
The problem is you'll have to have a 700 credit score, which you're going to have quickly because the way you've got everything set up here. It won't take long to get that.
Yeah, like I say, it was 720. In fact, it was a little bit better than that. It started going up a little bit because I had medical bills, but it was 720 until I opened that last credit card that had the 0% interest rate, and then it dropped down to, what is it, 680 something. So
Okay.
it shouldn't take it long to go back up again, I wouldn't think.
No, it won't. And especially when you pay your credit card payments, make sure you're making multiple payments throughout
Okay.
the month and don't just do like $539 on the due date.
Okay.
Do $20 to $50 payments 2 or 3 times a week.
Okay. Okay.
That really appears to boost the score. Plus, it knocks off some of that interest they're going to charge you.
Okay.
Okay.
I get paid twice a week. So, and does it matter when the statement date on the credit card is, if it's best to get my, okay.
No, it doesn't make a difference. So this is the way I had one this morning, and that's what I'm going to do here. So if you have 21,090 is your current, but let me look at your living expenses. Because let's say that you said, okay, I'm going to put my YouTube TV, the YouTube Premium.
I've got everything except the loans going into my City Card now.
How much is that total that you're doing? Is it 1680?
Whatever. Hang on. The only thing I'm keeping out is my loan payments.
Oh, really? Okay.
Yeah. Everything else, all my subscriptions, everything. Okay. My loan payments and of course credit card payments I have to make. But
okay. So that's 1680 according to your worksheet for everything but your loans.
Yeah, I've got everything transferred over into coming out of my City Card.
Okay, so that $840 needs to go in here every 2 weeks. Okay, so then if you're breaking up that 840 and you're doing 20, 50, 100 in multiple days, that's going to boost your credit score.
Okay, good to know. Okay. Very good to know.
So be doing that. So a total of 1680 would go into your credit card then. You're doing that right. That's exactly what I would do.
Okay.
But with your line of credit, if you just stayed where you're at, what happens is the $539 that you're showing on here for a payment on this card has been satisfied when you're putting in this payment every month.
Okay. All
right. Same with the Everwise.
And I've not really been putting anything into my HELOC right now. When I did a little bit, a couple months ago when I started watching you, I did put some of before I switched everything over to the credit card, everything, going into it. I did put some into it because I think it was right at 37. I've got it down to 34 now, but since then I've just been doing the minimum on that until. Okay.
So you need to start first putting all of your income into here.
Okay.
Because that eliminates this payment too. Okay, that satisfies it. So you're not even paying this payment.
Okay.
All right. So when your income goes in and you're bringing this down, then when those city payments are coming out that you're making, they're coming right out of here. Okay. So let's say you do 100 or 20 or 50, however you decide, it'll build this back up. But you're paying everything off of the credit card. The only reason you're doing multiple payments is to get your credit score up. Okay. However you choose to do that. But this right here, this payment that you have on here of $349 is now satisfied, as is the credit card payment that you're going to be doing this way. That's $539.
Okay.
So you're at 18.8. So you're at 888 that you've actually gained in cash flow because you're using these lines of credit correctly.
Okay.
So you're 888 on top of what you already have showing, which is 138. So you're at 1,026 for cash flow, doing nothing but just putting your money where it serves you into those accounts.
Okay. So I put all my income into the HELOC and then I pay the credit card. I still have all my other stuff going to the credit card, but then I pay the credit card with the HELOC, correct?
Yes.
Okay.
Exactly.
Okay.
Exactly. Yes. And your other loan payments. Of course, you would want to grab the 0% before the promotion runs out.
Right.
Then it looks like that you're going to be grabbing the Discover loan first. So if you're in less than 16 months, you're going to be paying that off. I really wish we could do that earlier because that's very expensive. The only way to do that is to increase your line on your home. That would be the only way. You may have to just work this down and see, like, do you get extra income throughout the month? Are you paid weekly, bi-weekly?
I'm paid twice a month. I'm paid on the first and the 15th.
You may be at your high HELOC as far as a second position until you move into a first position and gain some cash flow that way. But that being said, you would do this.
Uh-huh.
It looks like you would do this for about 12 months and then be able to pick up most of the Discover, if not all of it.
Okay.
Because if you can pick that up, you're going to gain 517 a month, and that
Okay.
help you work that down as well. What other questions do you have?
One question, and like I say, since I don't know much about my HELOC, how do I pay a credit card with a HELOC?
So is the HELOC linked to your checking account?
Yes, it is.
Okay, so does that mean that you can transfer money into your checking account anytime you need it?
I don't know. I can, and I'll have to check in on that some more. I think I should be able to, but of course, I pay it through my pay my HELOC through my checking account, and I've paid more, but I've not ever. Sorry, my brain's kind of fuzzy today since I've not felt well. I'm not taking money out of the HELOC to pay other bills.
Okay, is the HELOC with the same bank you have your checking account?
No, it's not.
Okay, that's the problem. So you have an option of getting a checking account wherever the HELOC is or preparing. So what that means is if your checking is in a different bank from the HELOC, then you're going to have to have enough time to transfer money into that checking account. And that usually takes, it could be immediately, but it usually takes 2 or 3 days.
Okay.
So if you know that your house payment is coming out here on the 1st, then you would have to transfer like on the 27th to make sure it was in here on time to catch that.
Okay.
I have a lot of people that do work that way with their HELOCs, and they'll have everything come out of their checking, but they'll prepare it to where they know when they need to transfer so that the money catches in the checking.
Okay.
So that's how you use it. Now, if you have it in the same bank, you have a link, and the checking account, as long as it stays at a zero balance, it will automatically pull from the HELOC.
Oh, okay.
That's why we like them in the same bank.
Okay.
Yeah.
Yeah, I've got my checking account, and I've been wanting to move to a different bank anyway. My checking account is with just a little small town bank here, and they're not that great about giving. Of course, we don't want loans or anything, but I checked with HELOC years ago, and they wouldn't do it for some reason. They just didn't offer it, or they just said, no, we're not going to do that. So then I went I went with the same bank. It's actually a couple of hours away, but it was the same bank that I had my car loan with. And of course, then, at that point, and they, didn't have any problem giving me a HELOC at that time.
Right. So if you want to get a checking account there, it sounds like it may be more convenient for you.
Okay.
Because once you have that link and if it's linked and you can ask for it, they'll tell you, then it's literally just works as one unit now. You're just paying out of here and it's automatically transferring out of here.
Okay.
It's very convenient.
Okay. Good to know.
Yeah. But if you move into the first lien HELOC eventually, then that is going to have a checking account with it, and it's automatic, so you don't have to do anything. It just, your income's deposited there and your expenses are pulled from there.
Okay. So to get a first lien HELOC, that's what I asked for whenever I would go into a bank is to...
Some banks don't do it, so you might have to pick and choose which ones do it. I have lenders in the event that you can't find one that will do them, and I can send them.
Okay.
But they're just like a second position as far as getting approved. It's about a 45-day process. They do the appraisals. They do, you have to sign like you're doing a HELOC. So same process, really. Another option, which I don't really think you need it, but it might work pretty fast. The automated system is the fastest way to go with getting rid of debt. I mean, you could try that as well. They give a free personal analysis to see what they can do with you there. But besides that, you're already on the right track.
Okay. I kind of thought I was, but I just wanted to run this past you to make sure, that I can that I'm not missing something that might benefit me also.
Right. No, I think you're doing exactly what I would be doing, except I would be letting everything revolve out of that HELOC.
Okay.
Because you're going to save the interest on top of, turning that payment into cash flow. So it's going to
Okay.
help you work it down faster.
Okay. I appreciate that. All right.
You're
Thank
welcome.
you.
All right. Have a good day.
Okay. Thanks. Bye bye.